I was scared to buy a $400,000, $500,000, $600,000 property. I mean, that's a scary thing. It kind of helped me to have the courage to now buy more properties and to extend myself and do some of those things that are uncomfortable. Because I saw that it works. It works out, especially with time.
From cornfields to high-rises, office to industrial, houses to hotels, and every other asset class in real estate, we cover the people, the projects, and the profit. Welcome to the Investing in Iowa Show. This show is for go-doers, action takers, and business owners. It's for people like you who are sick of Uncle Sam taking a huge bite of your apple. If you're looking to get ahead of what's taking place in Iowa, learn who is doing what, and how you can get in on the action, you're in the right place. Hosted by Neil Timmins, an Iowa native who has been involved in over $300 million in real estate, right here in Iowa. Recording in studio from West Des Moines. Here's your host, Neil Timmins.
I've got Seth Walker here on the show. Seth, welcome.
Thanks for having me.
I'm excited you're here. Say, for the audience to say, who are you? Where are you from? What do you do?
I'm Seth Walker. I live locally here in Urbandale. I'm a broker and primarily a salesperson at RE/MAX Concepts in Windsor Heights.
Yeah. Talk to me. Did you grow up here in town?
So I grew up in the Southeast Polk area.
Okay.
Briefly moved away to Southern Iowa. We lived in Centerville by Lake Rathbun for 3 years, and then immediately after graduation moved back to Des Moines, and I've lived in every nook and cranny of the metro.
Yeah.
There is, I believe. So,
how'd you get and when did you get into real estate?
so coming out of high school, didn't have that motivation to be a particular, doctor, attorney, whatever. I just knew I wanted to work for myself. So, I did go to DMAC without direction, just took meaningless classes, and that was reflected in my grades. So anyway, I, like I said, wanted to be an entrepreneur. I helped my dad do construction stuff, and this was kind of before the, fix and flip type shows and all of that,
Sure.
GTV. But I stopped in a Iowa Realty in Ankeny and said, I need a realtor. I want to buy a house to flip. I want to find an investment property, purchase it, fix it up, and sell it. And the broker there said, how about you become a realtor? So, why?
Ever the broker, always recruited. I love it.
Yeah. So I was roofing at the time. It was a hot summer.
Okay.
And I said, that actually sounds pretty good.
Okay.
Everyone in there was cool and dressed nice and nice cars. And I said, let's do it. So,
What year was that?
I believe 2001, January 1 of 2001, I believe, was when I got my official license. So that would have been the summer of 2000, and I was 19-year-old, 20-year-old kids.
Yeah. So you get into real estate, and you're coming through the 2000s, so the build up all the way through until 2008 was incredible.
Yeah.
What was that like early on?
I struggled mightily. Sold one house my first year, I believe. Towards the end of that first year, lived on my parents' credit card, racked up that debt, and didn't do much. So it was not a good start. That being said, I was 19, 20. My friends weren't buying houses. My friends' parents didn't trust me to be their realtor yet. So yeah, no, it was a real struggle.
Yeah.
I actually initially made my income through flipping houses and doing construction still. So I had met an investor or two that would buy the houses. I would do the work, and we'd share the profit at the end.
Yeah.
I did a couple on my own. Most were done like that. So I learned the business, made a little bit of money. It wasn't big money. We had flops, and I think, the most I ever made on a flip was around $10,000. And that was with me spending a few months there,
Your time.
doing it. Yeah. Hourly wage was super low,
Sure.
but I was free. I was independent. I was doing my own hours. I was doing my own things. And I didn't know it, but I was getting a heck of an education.
No doubt about that. Yeah.
Yeah.
So you stick around long enough, though, to make it your second year, when most would have bailed, I think.
Yeah. Yeah.
What kept you going there on the brokerage side?
Well, one, I wasn't qualified to do anything else. And that's a joke, but it's also true. I didn't have the formal education to go into another form of business. So through those years, I was still one eye on real estate, one eye on everything else. What other businesses out there that I could latch onto and make work. But just through time, I started to succeed. And then that built up to, me being in my mid-20s then and starting to have friends that were purchasing homes and starting to not look like a 19-year-old kid in an open house. And slowly built up my business.
All along the way, were you still investing?
Yeah, so I would purchase throughout those years, a fix and flip where I would do a like home on contract or two.
Mm-hmm.
So I was always dabbling in that. Not great success, but yes, is the answer. And it was getting me by. And as a single guy,
Sure.
you don't have to have a ton of money when you have roommates and things. So, yeah.
What did you learn from all those early years on the investment side?
Well, a lot of it was like from my business, from Onward Homes Now, looking back, I would say just knowing what it takes to repair and fix a property. I can walk into a property without an inspector, immediately know, hey, this is going to take this. I can see the foundation. I understand construction just by doing all those things.
Right.
Not that I'm a great tile guy, but I know kind of how to do everything, which just helps me a lot now to analyze a property quickly.
Right.
And then when I am hiring it done, to know immediately if that person knows what they're doing. Mm-hmm. And as it's happening, know whether I'm getting what I'm paying for. So that would be number one, I would say.
Hey, Iowa investors, this is Ava Baukamp, Chief of Staff at Legacy Impact Investors. Have you thought about adding real estate to your portfolio but don't have the time or desire to play landlord? At Legacy Impact Investors, we do the heavy lifting. Our team finds the deals, manages the properties, and handles all the day-to-day operations. Our select group of qualified investors co-invest with us, gaining ownership equity without opening a tenant email or responding to a maintenance call. They just share in the income, appreciation, and tax benefits. These opportunities aren't for everyone. They are for qualified, accredited investors only. If you want to learn more, please visit legacyimpactinvestors.com to apply.
All right, walk me forward. You get 5-10 years into the business. Are you still doing both things at the same time, or did one kind of lighten up?
Yeah, well, when things started getting good with sales, I slowed down investing.
Sure.
Always kind of had something going on, a little bit dabbling, maybe a rental or two, and then I'd get tired of it and sell it. But yes, once business really started taking off, I kind of lost my appetite to dig into these houses. Yeah. Plus, when you're actually working and in decent clothes and an office experience, going out and painting for 2 hours just isn't going to work.
No, it doesn't get real exciting, especially when the dollars and cents didn't sound like they were there.
Exactly. Yes.
That's
true.
That's a tough pitch. Okay. So over the years, have you done some additional properties? Have you kept rentals along the way?
So I kind of purged myself of everything.
Yeah.
My oldest investment right now is probably 7 years old, an apartment building, 6 years old, something like that. But yeah, so I had formed an investment group 2012-ish with a few guys that were in the Air Force here. They had been contracted and moved to Dubai, most of them. Some of them still were local. Pooled our money, bought some investment properties, apartment buildings, things like that. Yeah. Made our way to about 45 units. A couple of the guys lost their appetite for it because, we were building wealth. We weren't generating income.
Yeah.
So when you have 6-7 partners, if someone wants to sell, it's kind of over with for everyone else unless you want to buy them out.
Sure.
So 1031 those into farms and sat on those for a few years and then sold those. Learned that as an investor, I kind of want to do it on my own. Not to disparage any of those guys. They're all still friends, great guys. They're investors on their own, but said I'd rather have one house that's mine that I can control than the 45 units we had.
Right. That,
I really only had a small portion of the say, one vote.
So you started buying those in 2012. So walk me through the time frame there. How many years did it take you to buy 45 units?
We probably 3-4 years tops,
Okay. Yep.
2-3 years. Now these were apartments, so we're,
Yep.
8-10 units at a time or whatever.
Incredible time period to be buying property.
Yeah. We got, we actually made some decent money on them. And like I said, we weren't taking any income. Everything that we made went back into that business.
Yeah.
And then the tenant issues and the micromanaging, and with only 2 of us being here in the States and local, that meant, or in Des Moines, it was on us to take care of those day-to-day operations. My other business partner was in sales as well. And we had just, hey, let's move to farms. Once every 6 months, we have something to do type things.
Yeah.
It's all in CRP and GRP. We weren't doing crops. We were just the passive investors with that. So that appealed to our time, at least. It was, and plus we had land we could enjoy,
right,
and hunt or camp or
Yeah.
whatever.
Yeah.
Just walk.
I always said there's 2 equations that investors need to give consideration to is, yes, what's the ROI, but also what's the ROT, the return on time.
Right.
Because you may squeeze, you can go buy a whole bunch of dumpy properties and
Yeah.
ROI is incredible. But if you value your time and put a calculation to it, it requires thought.
You're absolutely right. I mean, that takes time to learn. That's your wisdom now. When
Yes.
20-year-old, 25-year-old kid, that didn't really click, I guess.
I lived it
Very important.
I lived it just like you, and my time wasn't very valuable back then.
Right.
Not as valuable as either our time is today.
Sure.
Yeah.
No doubt about that.
How were you managing the apartments during that time?
We self-managed them.
Okay.
So we hired we pretty much had a maintenance guy.
Sure.
So we weren't doing, I wasn't painting, I wasn't cleaning, I wasn't doing those things, but we were selecting what went into them and instructing that. And then we would find the tenants in that. So,
Yeah. And manage everything.
Yeah.
Finish. Yeah.
yeah. And then towards the end of that, another broker in town here where I was at, we decided, we both had few rentals. We said, let's start a property management company under, not under the RE/MAX name necessarily, but at least under that umbrella. And that exists today. So we have, I do have a property management company now that I use mostly to take applications for payment, stuff like that. I still to this day show every property to the tenants.
Do you really?
It's still something I like some control of.
Yes. To your own tenants, are these properties that you're managing for yourself, or you also have a third party arm?
So I only show for my personal properties.
Yep.
No, I mean the property management company has another 150, 200 homes that I don't know anything about, don't deal with.
Yeah. Well, there's a benefit from you being that close to your own tenants. It's your own money, and the tenants, there are large assets, and the tenant going in there it's a big deal to be able to properly screen somebody.
Exactly. I think I've had a little bit better luck than most because of that, because there's a face to it, especially if you're running through a larger company like RE/MAX. When they see that address, they see the appfolio coming from that property management company, it's a little bit more faceless, like I'm a corporation. I think it helps they know I'm a real guy that lives in our community, that has a family, and I hope at least it seems to have helped.
Going through that time period when you own property with other folks, outside of you learning, ultimately deciding you'd rather own by yourself, what else did you learn through that experience?
Well, I was scared to buy a $400,000, $500,000, $600,000 property. I mean, that's a scary thing, especially that was before, when I was not doing as well in sales. So it kind of helped me to have the courage to now buy more properties and to extend myself and do some of those things that are uncomfortable. Because I saw that it works. It works out, especially with time. That debt's not as big and scary as it seemed to me. So
yeah, especially when we've gone through what we've gone through over the course of the last, really since you and I've been in this a long time, seeing the cycles from the 2008 era,
right,
and then coming through, really the last 2.5, 3 years from the interest rates changing, to wonder what's going to happen, and prices continue to rise and rents continue to rise.
Yeah, they've continued to rise, and even if there's a down period, time will heal that. So unless I'm selling that property and I've then actually realized the gain or a loss, as long as I continue just to hold it.
Yeah. As you look forward to 2025, What are you most excited about?
I bought my first Airbnb, which isn't good timing. It's probably not a wise investment, but
Tell us about it.
it did excite me to do. So I'm spending more time on that one property than all the other properties combined. Probably it hasn't made a dime yet, but I'm excited to do something new and to see how it works.
Brand new in your portfolio. How long have you owned it?
I bought it in September 1, something like that.
Okay,
So
so
very new.
we're about 90 days in or so.
It's only now being completed for use.
Yeah, you've gone through, renovated the whole thing. Now you're at furnishing stage.
So it was a newer property. It's a 3-year-old property that's technically downtown, single family home. It was one of those filler homes they used.
Yeah.
So it was only 3 or 4 years old, but yeah, I put in all new hard surface flooring, painted everything, all of that. So that's being completed. Should be done literally next week.
How are you going to manage it?
Self-manage it.
All right.
For the first one.
Yeah.
So, I mean, it's just one. So of course I've watched YouTube videos, so I know everything about short-term rentals.
Yeah.
I know all the tips and tricks.
If you're a house flipper, execute the BRRRR strategy, or do double closings and are in need of money, Little Guy Loans is your go-to lender here in the Des Moines area. Time is money. Loan approvals in 24 hours. Closings in 5 days. Little Guy Loans was founded by Neil Timmins, an investor just like you. Since he has been in over 10,000 homes in Des Moines, there's never an appraisal. Houses, multifamily, and commercial property loans up to $1 million. Check out www.littleguyloans.com.
I've always been a guy that just kind of jumps in and learns by doing. With all the construction stuff, all of that, I just did and figured it out as I went.
Yeah.
So that's what I plan to do now. I know I could probably have a higher return if I did a few different things, but the education, I think's worth it.
It's I look forward to hearing about how that goes, because it's
yeah, I mean, I've had a lot of realtor friends buy one.
Yeah.
And I've seen a year later them putting it back on the market for sale.
Yes.
So I've analyzed it in my mind, at least, of let's do short term give it at least a year.
Yeah.
And then I can turn it into a long-term rental and be fine on.
Yeah. How did you underwrite that on the way in? I asked because I've seen some people, they underwrite on the short-term rental numbers, and things soften in that world and you can really get hurt. I've seen other folks is as long as it works as a long-term rental, I'm good, because any short-term rental gains, right, that I get, just a cherry on top, just extra gravy.
Yeah. This is the first probably investment property I've just purchased on the outright market. It was listed by another realtor.
Okay. Yeah.
I was showing it to a customer, and just in my mind, I'm thinking, this is the best house I've shown in years that could be a short-term rental. And I literally said to him, because he was writing an offer, I said, if you don't buy this thing, I'm going to.
Yeah. I
said, I think I can. Well, he ended up not writing the offer. We were supposed to meet the next morning. He didn't. I slept on it for the weekend and was just continued drawn to it.
Yeah.
It's a really neat property in the sense that it is single family, but technically downtown. So it's back to the river. It's on the bike trail. You can walk to Sec Taylor in 10 minutes. You can walk to the East Village and all that in 10 minutes. To answer your actual question, though, is I didn't do a very good job of analyzing it. It's on an abatement, which helps.
Yep.
So I got some, 6 years or so of pretty low, mortgage payments. So I don't have to have it overperform to even break even. But yeah, I only analyzed it really on the long term.
Yeah.
Saying, all right, my worst case scenario is this. If I can make this work as a short term and double up on that, then great.
Yeah. Well, good for you. All right, you ready for the final 3 questions?
Sure.
All right. If you had one piece of advice for your 20-year-old self, what would it be?
Never sell a property. I've sold so many homes over the years and made $5,000, $10,000, 20. Even if I'm making $30,000, most of that money's gone, if not all of it. Right. However, I look back at what I bought some of those homes for, and now I would have had literally per property, they've more than doubled. So it's easy to say now because I'm in a better financial situation than I was then. Back then, I was still surviving and using that money for my day-to-day groceries and things like that.
Right.
But if you don't have to sell the property, don't sell the property. talking to myself.
Yes. 2 books that changed your life.
2 books. Investment books or books?
Oh, books. Yeah.
I've only started really reading again recently. I'm going back to, my wife makes fun of me because I'm going back through all the old classics.
Yeah.
Stuff that everyone else read in high school, and I probably did too, but don't remember. I'm a religious guy, so I like religious books. So, of course, the Bible and that. But as far as other books, that's a great question. See, I wish you would have prepped me for this question. I'd have had some really intelligent answer that made me sound like a well-read
I like these shoot from the hips. We get more candid, honest answers to go, what comes immediately boils to the surface.
Yeah, I read some, but not a lot of self-help stuff anymore. I like I said, I like religious books. I have a degree in biblical studies from Moody, so I read a lot of that kind of stuff.
Yeah.
And then now I've started reading some fiction. I'm reading The Hunt for Red October right now.
Oh, yes.
So, which is 30-year-old book.
Yeah.
Probably, but
Yeah.
The first 100 pages are great.
Good. All right. If you were cast away on an island for 1 year, you could only get 3 pieces of data about your business each and every month. What 3 things must you know to know how your business is running?
3 pieces of data. So I'd want to know how many tenants paid the rent that month.
Yep.
All of mine is like longer term rental stuff now. So the second would be, well, that's a big one. When I analyze mine, I look at like return on cash is kind of how I look on it. So that would be another big one. And then I would want to know my vacancies, I guess. Kind of how I analyze the market is I use Facebook Marketplace to place my tenants.
Okay.
I think and I can tell big shifts in the market by posting a property and seeing if I get literally 100 and some inquiries in a few days, or I listed a property in Urbandale, single family, last month that I was expecting. I waited to even post it till after the weekend because I didn't want to deal with all the messages. Sure. I posted it in the morning on like a Tuesday. That evening, I'm like, I must have screwed it up. I didn't get any messages. Just didn't have any interest.
Yeah.
I got 5 or 6 that week and now it's rented. But I guess that would be the third data point is on my vacancies. If I have a vacancy, how many inquiries am I getting for that?
Yeah, the second one you mentioned, the return on cash. Has that been a bigger factor for you since going through the partnership where you were building wealth, but not building ultimately a cash piece? It sounds like you're more focused today on that return of cash.
Yeah, so I don't take any money out of any of my investments. I've never taken one dime as far as income used or spent on myself or anything. Everything goes back into one particular property. So all of my properties, they snowball, pay off that oldest property or whichever property you identify, right?
Yep.
So I use the return not to pull cash out of properties or that, just to understand if that's a quality investment for the cash I put into that. Because I am fairly cash heavy in each purchase. I put down 20%.
Yeah.
And then I pay for the capital improvements cash. I don't finance that. Yeah. So that is, I guess, an important piece to me because I have so much cash in each
into it. Yeah. That's great. Seth, I've asked lots of questions. What's one question I did not ask that I should have asked?
A question you should have asked. You've stumped me twice today. See, if you tell me these ahead of time,
I
always have something great. Here's what will happen. I'll be driving home and I'll be like, that's the question.
Yeah. All right. Well, I have another one. Your dad, who I've known for years, how did he end up in the business as an agent?
I got him into the business.
Is that what happened?
Yeah. So growing up, he was a lot of things, but he was primarily a pastor.
Okay.
But he also, that doesn't pay a lot. So he's very handy. He even built a couple of our homes growing up, literally himself, every bit of it. So he was about that same time coming out of a ministry he was working, thinking about maybe going into insurance of some sort. I got into real estate and I don't remember exactly why that caused him to, but within 6 months or 8 months of that, he also got his real estate license and joined the same brokerage.
Incredible. Well, one of the nicest guys I've ever met.
Well, thank you.
So for people, they want to find you, they want to follow you, they want to connect with you, where can they go? What should they do?
Well, cell phone's the easiest. You can always call me. Can I give my number?
Do it.
515-577-3728, or email, of course, at Seth at 515homes.net.
We'll put the information below in the show notes for anybody. Seth, I appreciate you being here.
Yeah, thanks for having me. It's been a pleasure.
Thanks for listening. If you're enjoying the show, may I ask a favor of you? Naturally, subscribe so you never miss an episode. But would you rate and leave an honest written review on Apple Podcasts? It does a lot for us here at the show, and I appreciate reading your thoughts. Great guests make for a great show. If you know of another Iowan who would be a great guest, or you yourself have interest in being a guest, well, get on our radar. Visit Investing in Iowa to fill out an application or recommend a guest. And if you want to connect with me one-on-one, go to LegacyImpactInvestors.com. Click on the Invest With Us button in the top right corner, and there you can pick a time for the two of us to get on the calendar and connect. Until next time, keep investing in Iowa.